Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PayPal Holdings Inc. quarterly report. PayPal Holdings Inc. offers a wide range of digital payment services to merchants and consumers worldwide. Some of the key businesses and services provided by the company include digital payments for online and in-person transactions, payment solutions under various brand names such as PayPal, PayPal Credit, Braintree, Venmo, Zoom, Zettle, Hyperwallet, Honey, and Paydy Transfer, and withdrawal of funds using various funding sources including bank accounts, credit cards, debit cards, cryptocurrencies, and stored value products like gift cards and rewards. Consumer credit products. PayPal Holdings, Inc.'s stock price has dropped significantly over the past year due to several key factors. The company's Q4 2023 earnings report sparked a 13% decline in shares after announcing a decrease in active user accounts and conservative profit growth forecast for 2024. This trend continued with the Q2 2025 earnings report, where stagnant user growth and a 4% decrease in transactions per active account led to a 9% drop in stock price. Additionally, PayPal's inability to adapt to advancements in artificial intelligence has contributed to its underperformance compared to competitors like Visa and MasterCard. The company's total payment volume, TPV, growth in its Braintree enterprise payment platform also raised concerns about revenue slowdown, further fueling investor worries. As a result, the stock price has declined by 16.7% year-to-date and 10.71% over the last year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth drivers. The main contributors to revenue growth are an increase in funds receivable and customer accounts, net revenues, and a decrease in transaction and credit losses. Additionally, the company has seen significant growth in originations of loans receivable, proceeds from repayments and sales of loans, and revenue from other value-added services. The expansion of products and services offered, geographical expansion of operations, and increase in active accounts and payments transactions on platform have also contributed to revenue growth. Revenue decline drivers. On the other hand, revenue decline is driven by a decrease in short-term investments, net revenues, and an increase in other operating charges. Global and regional economic conditions, such as recession, inflation, and supply chain issues, have also negatively impacted revenue. Furthermore, environmental, social, and governance (ESG) issues, including non-compliance with new laws and regulations, have contributed to the decline in revenue. Overall, these drivers highlight the importance of managing funds receivable, expanding product offerings, and adapting to changing economic conditions to drive revenue growth. Net income and profit margins experience significant growth. The company's net income has seen a substantial increase, rising by 25.3% to $3.796 billion between the 9 months ended September 30, 2024 and 2025. This growth is also reflected in the 3-month period, with a 24% increase of $238 million compared to the same period in 2024. Profit margins have also improved, with operating margin increasing from 17% to 19%, and net income margin rising from 13% to 15.5%. The main drivers behind this growth are the decrease in transaction and credit losses by $322 million, and the significant increase in proceeds from repayments and sales of loans receivable by $6 billion. These improvements demonstrate a more efficient operation and better management of financial risks, ultimately contributing to the company's increased profitability. The company's financial performance indicates a consistent generation of positive operating cash flow. In 2024, the net cash provided by operating activities reached $5,056 million, and in 2025, it decreased to $4,032 million. Despite this slight decline, both years show a significant inflow of cash from operations, demonstrating the company's ability to generate positive operating cash flow. The company's debt level has shown a mixed trend over the past year. While there are slight variations in the reported figures, the overall picture suggests that the debt level has remained relatively stable. The long-term debt increased by $1,397 million from 2024 to 2025, but this was offset by a decrease of $0.032 billion in total term debt over the same period. However, interest expenses have shown a significant increase. For the 9 months ended September 30, 2025, interest expense rose to -$330 million compared to -$285 million in 2024. This increase is attributed to incremental expenses from debt issuances in March 2025 and May 2024. The company's financial performance has shown mixed results across various segments. On the positive side, international transactions have been a standout performer. However, other areas of the business have struggled. Restructuring and other expenses have seen a significant increase, with a 10% rise over 3 months and a 35% decline over 9 months, indicating inconsistent performance. Credit losses have also taken a hit, increasing by 32% in 9 months. These underperforming segments will require attention to improve overall financial health. Management's outlook and strategy. The company expects continued growth in its payments platform, with transaction revenue tied to total payment volume expansion. To achieve profitable growth, management has prioritized cost savings, aiming for $280 million in annualized reductions through the QTWO 2025 plan. The company is confident in its cash position, citing sufficient funds to meet requirements within the next 12 months and beyond. However, it acknowledges potential risks that could impact investment-grade ratings. Management's strategy also involves strategic investments and exploring external capital sources to expand credit product availability. The company has made significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased consumer receivables worth $934 million as of September 30, 2025, and $390 million as of September 30, 2024. These purchases have enabled the company to expand into new markets. On the other hand, the company has also made divestitures, selling loans with an unpaid balance of $18.3 billion in 2025 and $14.8 billion in 2024, resulting in net proceeds of $18.2 billion and $14.7 billion respectively. These transactions have allowed the company to restructure its assets and focus on core business operations. The company has demonstrated a commitment to returning value to its shareholders through 2 key initiatives. Firstly, it has paid dividends, with a cash dividend of $0.14 per share declared on October 27, 2025, and a quarterly cash dividend program initiated in the same month. Secondly, the company has also engaged in share buybacks, repurchasing approximately 63 million shares for around $4.5 billion between September 30, 2025. That concludes the financial summary for PAYPAL Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.